All right, thank you for tuning in to another edition of the Vulcan Report. Just real quick, this is going to be for Wednesday's trading, July 28th, 2010. Here is the securities that are in play for Tuesday. Let's run through these. Those of you who remember the video I did yesterday explaining how to use it, if you have any questions about that, please refer back to that video. Let's just jump right into this real quick. The first thing to notice here is the British pound on this one today. This is a potential pulse wave buy signal. Okay, that's what we got there. That's a buy-in at 156.03. Your stop loss is at 154.98. Okay, and you'll note this market is currently in an uptrend. Next security. This is the Canadian dollar Forex. Okay, the British pound is also Forex. Note it says Forex. All right, on this one here, this is a short. You're going to sell short at 102.47. The stop is at 104 even. Notice that this security is in a downtrend. Notice the downtrend column. Next security. Alright, this is the grains ETF. You'll note here on this side over here, the ticker symbol is JJG. Okay. This one is in a uptrend, and this is a buy at 37.15 with a stop at 36.57. Again, you're going to go long at $37.15 with the sell stop at $36.57. All right, the next security. This is the NASDAQ 100 ETF. You'll notice you don't see the S&P or the Dow. We don't have a clear signal for that, so there's not one generated. This is a long, going long at $46.74 with a stop at $46.18. Notice that this market now is in an uptrend. The NASDAQ 100 is leading the Dow and the S&P. It's on an uptrend. And those of you that have been following the Vulcan Report, you know that last Thursday we had a buy signal on this one. Let's go ahead and take a look at that. Alright, here we are. This was on the 22nd, going long at, okay, now as you see here back on the 22nd, okay, as you can see here on the 22nd, which was last Thursday, we had a buy-in at $46.01 with the sell stop at 45.20. Okay, so those of you who bought on Thursday, you're still looking really good on this one here, on this trade. So you would have already moved your stop to break even, which is a minimum. You probably would have put it enough to cover commissions depending on where you trade. So you probably could have moved the stop to maybe like 46.05 or 46.10 or whatever, just to lock in a little bit of something, just in case the market pulls back, or so that you don't lose anything on the trade. You're actually playing with the house's money now, so that's how you would do that. Okay. All right. Moving on. This is the New Zealand dollar. This is also Forex. As you can see, we have a potential pulse wave breakout on this one. This is a buy-in at 73.99 with a stop at 73.06. Notice this is in an uptrend. Alright, the next one is NYMEX crude oil futures. For those of you who trade futures, we have a possible pulse wave breakout on the crude oil. That's a buy-in at $77.24 with a stop at $76.86. So this is a very tight stop here on the crude oil. Very tight. Next one is U.S. bonds. Taking a look at interest rates. The longer end of the yield curve You'll notice here the ticker symbol is TLT. That's the tradable. This one is also in an uptrend, and we have a potential pulse wave breakout. The buy-in is at $99.21 with a stop at $98.53. Next one is the US dollar Swiss franc Forex. This one is a buy at 106.43 with a stop at 105.56. And this market is in a downtrend, so we're looking to buy a retracement off of support. That's what this is about here. However, we also have a sell short signal, so that's a sell short at 105.56, putting your stop at 106.43. So you're placing two tickets, one to buy here with this is your stop, one to sell here with this is your stop. Whichever one is filled first, cancel the other order. And that's the direction that you're trading in. Finally, we have the dollar yen Forex. This one here is a short. It is in a downtrend. This is a sell at 87.21 with a stop at 88 even. That's all we have as far as securities that are in play for Wednesday. Take what you can, give nothing back.